Welcome back to the channel where we dive deep into the market trends and see what's happening for the week ahead. Today, we're looking at the recent upheavals in the stock market driven by a new wave of global tariffs and what this actually means for you and for your investment. Let's take a look at the stock market overall. The VIX is at $45. It seems like it wants to go even higher. Volatility index, it's crucial to look at because it gives you the level of confidence or how the market is scared and uncertainty that goes along with it. Let's take a look at major indexes. The market's been on a roller coaster with the major indices like Dow, S&P 500, NASDAQ, and Russell 2000 all crashing substantially on Friday, and they've reached the worst weekly losses since March 2020, all due to new tariffs announced by President Trump and the countermeasures by China. The ramifications of these tariffs are widespread, affecting everything from tech to textiles and even to the automotive sector. Now, with the US imposing unprecedented level of tariffs, which have increased the average tariff rate to about 25%, the highest since before the 1930s. That's right, 100 years ago. We are seeing substantial disruptions in global supply chains and pricing structures. This week is crucial as we anticipate the release of CPI and PPI, which will provide the first quantitative look at the tariffs' immediate effects on prices. So let's jump into it here. On Tuesday, we've got PMI. On Thursday, consumer price index expected to reflect the immediate impact on tariffs. Friday, we've got PPI and University of Michigan consumer sentiment. So that's going to give us a further insights into inflation and consumer outlook amid escalated tariffs. Shifting our focus to the sectors, the apparel and tech sectors, including giants like Apple and Nike, have felt the brunt of the new tariffs, experiencing significant drops. Also, the auto sector also faces uncertainty as new tariffs on imported vehicles could reshape market dynamics significantly. Let's talk about some specific stocks that I want to watch tomorrow in the pre-market. First one up is ticker SBET. It went up from 25 cents to 42 cents after hours, followed by consolidation above VWAP and key moving averages, which to me indicate intraday momentum. Volume surge was at plus 359%, clear signs for of attention and liquidity present. So yeah, this one I definitely want to look at it. I want to see this moving above this level here of 39 cents. That's the pivot potential, and then full break here above 42 cents for push towards 45, 47, and 50 next. So keep that one in watch. Next one up, this one I'm super excited about. Ticker is CHSN. After significant run, watch for continuation above 37-cent level and potential resistant break up to 39 here, and we've got some range here all the way up to 42, 45, 48, and 50. So keep that on your watch, and as it can move quite quickly with only 3.65 shares float. Right, shifting to earnings. This week, we've got Taiwan TSM on Thursday, which will be crucial for tech sector volatility, and Delta Airlines on Tuesday, expected to see a slight dip in earnings, but a rise in revenue. So yeah, relatively light week, but we're still gonna pay attention to that. And moving on to top picks of the week for our swing trades, we've got the first one. Cencora, COR ticker. Watch for potential base formation as it pulls back after a recent rally. The stock strengths could indicate resilience amidst market fluctuations, but this one has been on a run with significant volume here, indicating institutional interest. So I'm going to be watching here for pullbacks and potential entry moving forward. Next one up. Virtue Financial, ticker VIRT, exhibiting relative strength with potential for new buy points as market volatility increases trading opportunities. I want to see this level here at 34.80 holding nicely, which would give us nice flat base building for potential handle as well, and push up above that resistance here. Watch for move here to that 41.50 area for some opportunities presenting themselves. And again, final thoughts. As the market reels from the latest tariff announcements and prepares for incoming economic data, you got to stay informed and nimble, which is more crucial than ever. You should prepare for heightened volatility and consider strategic positions that can withstand or capitalize on these turbulent times. Remember, we need to be planning what we're going to do next. For me, it's building a watch list. It's paying attention to emerging leaders, the ones that hold their levels and exhibit relative strength. So, strategy right now and our game plan, monitor closely, stay updated with real-time market reactions to adjust strategies promptly. Two, diversify risk, balance portfolios to mitigate potential losses from sectors heavily impacted by tariffs. Keep your exposure to between 0 and 20%. And capitalize on volatility. Leverage sectors showing relative strength for short-term gains. And as always, thanks for tuning in. Make sure to hit that follow button, and I'll see you in the next one. Take care.